Welcome to One for the Money, the weekly talk show with interviews you can use. I'm national financial columnist and talk show host, Steve Savant. And on today's show, your home, your number one asset. For most Americans, your home is the largest asset you'll ever own. And learning how to make your home work hard for you today could put more money in your pocket for retirement tomorrow. How? By bringing you up to speed on tax credits that can improve the value of your home. And to help us understand tax credits, rebates, utility refunds that can really save you money and use more money for your retirement, real estate agent and professional instructor Cheryl King, president of Hybrid Home Living, all here on One for the Money. Well, welcome to the show, Cheryl.
Thank you, Steve. It's a pleasure.
I'm so glad you're here because really, when you think about it, we all own different assets. I have 401k, I have retirement monies, I have annuities, I have life insurance, I have mutual funds. But my biggest asset is my home. And I think we need to figure out how to treat our home right and make sure we're doing everything we can to maximize our home so it can actually free up money for our retirement. I mean, think about that, home and retirement. That's strange.
I know, it's a rather novel concept over the last few years.
Well, let's talk about it. What about the market? Everybody's wanting to know, what's the national market like right now? Is it pretty good? Is it bad? Are we in recovery?
Well, actually, the national market, you'll hear numbers, Realty Track just said we have about 11 million foreclosures. And a lot of people have been shocked by that because they thought that, by now we would be through more of the foreclosures. But it's actually in large part because the eastern states are judicial foreclosure states versus the non-judicial and mostly in the West.
Well, let's talk about that because I think a lot of people do not understand that it's different out here in the Southwest than it is in the East Coast. Talk about judicial and non-judicial.
Well, the judicial, as it sounds, it has to go through the courts. And on average, it's about 18 months, and they have rights of redemption. So the process is much longer than it is in our deed of trust states that generally are on the western half of the U.S. So in a non-judicial state, on day 91 of the lender not receiving the payment, they can issue a notice of default. And roughly, 180 days out, they're sending it to the trustee sale or the auction, and they're foreclosing. If they're efficient, which a lot of our lenders haven't been, but so it's much quicker. 180 days versus 18 months.
I was surprised. I was looking at your brief before the show, and I thought I was looking at the top foreclosure cities in the United States, and I thought Phoenix would be in there, but it was not, to my surprise, and that's good for us. Talk a little bit about, though, some of these cities when we're recovering, and we're in a non-judicial state, right?
Right.
So we've recovered a lot faster, and I noticed you were talking about this, and I heard you speak about this before. There was about an average amount of home inventories, about 33,000. And we're sitting at what?
As of today, 17,000.
In half. So what's happening to values right now in Phoenix?
Values have gone up. We don't have the official numbers yet for 2012, but as of November, our market had gone up 42%.
So it's
year
moving.
over year.
It's
moving.
Now, who's buying it? Is it regular residential, or do we still have investors coming into Phoenix?
We have a lot of investors. We're seeing funds like Blackstone, Colony Capital, and they see this as a real business. It's interesting. Last fall, there was a conference held here in Phoenix, and a lot of them said, we got into this thinking that this was an easy way to make a profit, and now we see it as a business. We're in for the long haul. Now they're looking at markets like Atlanta, Miami. They're still here. They're staffing up, which is also good for our economy. They're hiring people, hiring contractors as well. There's a new market of green-collar jobs evolving out of this as well. So
when you look at the marketplace today, from a national point of view, we are in some format of recovery. I don't know how big it is, but some form. But in our area, like as we're talking here out of Phoenix, it looks like we've seen the bottom maybe. I don't want to be too optimistic here, but it seems that way.
Well, actually, being a Monday morning quarterback is always fun. And Michael Orr at the W.P. Carey School of Business has now looked at all the data and said that 2009 is when we hit bottom. So we're seeing a lot of people that purchased in 2009. I just worked with someone who had a 70% return on a property that he had bought then and sold. So not everyone will be at 70%, but there are profits, again, in our market, which is exciting.
Well, when we're looking at buying a home, and if we have people out there right now, some people in our audience will be buyers, some people will be sellers. Is this a buyer's market from our state's point of view? Let's just talk about Arizona for a moment as an example.
Arizona is a seller's market, and we have been for most of 2012. Our inventory levels have been low, and that's pushing pricing up. Even at the trustee sale auctions, where they were able to purchase at 65 cents on the dollar, they're at about 98 cents. Right now.
So there's been recovery. Now every state's going to be different in the union, and you have to check with whatever state you're domiciled in to find out what's happening in your area, because we talked about 5 cities that are still on the high foreclosure list, but that could be because they're in judicial states where it's taking a lot of time to process the paper.
Exactly.
But I'm curious though, for us, do you think at this time that people understand, we've went through this now, are the banks participating? Do they look at us as a player? Are they still being tight with their money?
Actually, lending has freed up a lot. I work with a lender now that's offering 5% down on owner-occupied properties, which was unheard of. Right.
So 5% down, and what's the interest rate? What do you think the normal one is right now?
Well, the last loan that we closed was 3 3/4.
3 3/4.
For 30-year fixed.
No cost?
No cost.
3 3/4, no cost. That's huge. And we're going to talk about some of the things that are on settlement sheets in a couple of segments from now that you're going to find endearing. Think about it. The home crisis in the nation is starting to kind of level out. We're going to talk about all the things that you can do to make your home a winner. Appreciation, bring cash flow, lower your utility bill, all this on One for the Money, where we can talk about your #1 asset, working hard for you because you work hard for your money.
Did you know the average 401k runs out of money just 7 to 8 years into retirement? Time Magazine, the Wall Street Journal, and many other publications have warned of the difficulty of saving with a 401k. But what if there was a way to create tax-free lifetime retirement income with no stock market risk? Good news, there is.
Living in fear of the next market dive is not the way I want to live my life.
Why would I go out there and take on risk when I don't need to?
I have a lot less stress knowing I can't lose any more of my retirement savings in the stock market.
Call now to receive your free, no-obligation analysis of what this retirement vehicle could do for you, a comparison to your current retirement plan, and a free video that explains this exciting opportunity. Start planning a retirement you can enjoy instead of worrying about future tax increases and stock market losses. Creating income that will last your entire life is the most important thing you'll ever do. Take control of your future. Call now for your free analysis, comparison, and video.
Well, welcome back. I'm Steve Savano. Of course, we're with our special guest, Cheryl King, all about housing. And I'm kind of in my mode now. I'm heading for those last house that I want to buy. I don't want to move again after I do. I'm going to move one more time. I want to move. And a lot of people are like me, baby boomers. We're looking for the last home. And with interest rates so low, I think this is the time to look.
Yeah, definitely.
So we're looking around. And every time I think about getting a deal, and you said in the first segment, well, we think the bottom was 2009. I think, oh, did I miss it? Aren't there any deals to be had? And I'm sure there still are. But if I'm preparing, if you're a baby boomer and you're preparing for your last home, what am I looking for as a buyer?
Well, in real estate, we talk about location, location, location. It's a bit overused, but it's true. In Arizona, we have a lot of exciting things going on. And first of all, we have the climate. We don't have the hurricanes that you have back east, so we have the climate. We have a lot of investment in our economy. We have a lot of solar manufacturing companies and tech quarters developing in Chandler. So it's really a great place. And then we have our events. Like this year, we're at the time of year, we just had Barrett-Jackson. We have the Waste Management Golf Open. So, when I look for purchasing real estate, I look for my exit strategy. And Arizona gives us a great exit strategy because you've got such a diverse group that wants to live here. When it comes time to sell, you'll have someone. So enjoy it while you're here. Enjoy all the great weather, the events that we have, and then you'll have a market when you want to sell.
As a prospective buyer, and let's just say, and I think this is true. This is my game plan. The next house is my last house. So I have to think about, I'm going to grow old with this house. How old do you think is too old? You look at a construction of a home. How old do you think is, hey, you draw the line, it's just not going to be mostly modern, it's certainly not going to be efficient. So how old can I really go?
Actually, I spend a lot of time talking to people about this because we tend to think buy a new home. A new home will have less maintenance, but insulation, for example, settles. You lose about 1 to 3% a year. So you can buy a new home thinking that it's energy efficient, and it may not be. And we're going to talk about energy efficiency, I know, in a little bit. But you can actually we've bought homes that were built in the 50s and made them more energy efficient than a brand new home.
Now, give me an idea on that, because I would have thought exactly the way you said it at first. Buy a new home, get all the new technology, the new insulation, the new AC, all those things. But you're saying maybe even a home that was built in the 50s? That surprises me.
Yeah. There are tax credits and utility company incentives that can help pay for those. And so then you get the house that you'd like. And we talked in the last segment a little bit about lending and that money is actually becoming available again. So there are home renovation loans, 203K loans. With some of the loans, as long as just one wall is standing, you can rebuild the house. So you can have your dream kitchen if you like to cook, and you can also have, the high efficiency air conditioner as well.
So if I'm looking to buy a home, can I wrap the renovation into my mortgage?
Yes.
And they're okay with that? Lenders are very warm to that idea?
Yes.
All right, so let's say I find my home, and let's say it has a lot of, like an older home might have more acres, more lot space. So let's just say I see that. When I first walk into this home, I'm thinking, okay, the value of that home, I'm wondering where that's going to be over the next 20 to 30 years, maybe my mortality. When I'm looking at, when you're looking, and I know it's hard to talk about the future based, especially after what's happened in the housing crash, but what do you think is a reasonable appreciation, like in our state, for example?
I think that, in the 5 to 6%, and actually we've been looking at properties that have the acreage just because right now there's basically zero value has been added to the land. And our prices were so low that they were actually below the cost of construction. So, and that's where I say, 2009, it's not too late to get into our market. You might see a 10 or 15% instead of a 30%, but still, when you're compared to having your money in the stock market, it's a home run. Where else can you get even an 8% return on your money right now?
So let's say we see a home that we like, and we're thinking about, what can I do? Everybody's saying, if you put so much money in certain areas, you won't get that return back. So you have to be very judicious about what you're going to spend your money in your home, because it is your largest asset.
Right.
And I want it to work for me. And we've talked about this before. There's a whole new idea, this idea, and I think, I don't know if did you actually coin the phrase Greenovation?
No. I wish that I had, but I did not.
Well, people are starting to think about efficiency. They're thinking about their utility bill. I noticed one thing that you brought up that I never saw before, which was, I saw, interest, my mortgage interest, my insurance payment, and my insurance, right? And
right.
My mortgage. I have all that, but then you're throwing in, oh yeah, what about the utility bill? Are banks looking at this now?
On the commercial level, they are. Actually, in the multifamily area, they're starting to ask the owner-operators, what are you doing to reduce your energy costs? Because reduced energy costs mean you have more money to pay back their bank loan. On the residential level, we're not seeing the lenders ask for it, we're seeing the buyers ask for it. They're saying, it's great when I buy my home in the spring, and here in Arizona, your electric bill might be $150 a month, and life is good when you look at, your loan officer has said PITI, but then you get your first electric bill and it's $300. So
when we come back, we're going to talk about this utility. Now we're putting that in our package to make sure that we understand our budget correctly. Now we're including utilities. We'll be right back after the break.
Did you know the average 401k runs out of money just 7 to 8 years into retirement? Time Magazine, the Wall Street Journal, and many other publications have warned of the difficulty of saving with a 401k. But what if there was a way to create tax-free lifetime retirement income with no stock market risk? Good news, there is.
Living in fear of the next market dive is not the way I want to live my life.
Why would I go out there and take on risk when I don't need to?
I have a lot less stress knowing I can't lose any more of my retirement savings in the stock market.
Call now to receive your free, no-obligation analysis of what this retirement vehicle could do for you, a comparison to your current retirement plan, and a free video that explains this exciting opportunity. Start planning a retirement you can enjoy instead of worrying about future tax increases and stock market losses. analysis. Creating income that will last your entire life is the most important thing you'll ever do. Take control of your future. Call now for your free analysis, comparison, and video.
Well, welcome back, everyone. I'm Steve Savant. Of course, we're with Cheryl King, the queen of all that's housing, and we're talking about utilities now being added on to your budget. So when a bank's looking at this, they kind of say, hey, can you pay the mortgage payment, the escrow payment that you have to pay every month, but also can you pay this utility bill? Now, what I like about this is you are getting into areas now that actually, can I make appreciation by doing effective purchases? Now, I've noticed some people say, well, you shouldn't put so much money into the kitchen, you may not be able to get it out. But you may want to put a lot of money into energy efficient areas, because now you're talking for every $1,000, if I've understood you correctly, for every $1,000 that you commit to energy efficient, you may be getting 10 to 12 to 1 ratio in payback.
Exactly.
Not only a lower bill, but it actually helps your appreciation of your home.
Right.
Talk a little bit about that, because do people have, is there a seal of approval for this, or is there a housing kind of a standard that you can look to see if they've done that?
Well, the Appraisal Institute has provided this a green addendum that a lot of appraisers don't know about. So if you're looking at buying or refinancing your home, definitely ask your appraiser to use the green
Also,
addendum.
not just for new homes, existing homes as well.
Existing homes as well,
So
exactly.
let's just talk that before we get too deep into this segment. Existing homes, if I want to do an audit on energy efficiency, I thought it would be, honestly, I thought it was going to be a lot of money, but I think you told me, you thought it was like, what, $99?
Yeah, exactly. You're in Arizona, APS, SRP, it's $99 is your cost, and then they subsidize this, so they pay the energy rate or the remaining $200. But still, $99 is a great deal.
No, when they come into your home, they actually bring gifts. They come bearing gifts.
They do. They bring CFL light bulbs, for example. Sometimes there's a plumbing fixture that they'll bring, for your shower. It varies a little bit, but yes, they bring gifts.
Okay, talk about it. I've got my energy audit. I have it in my hand now. I know where my weaknesses are. Talk about the first thing that you've seen in most audits that people are going to actually replace, so I can get that appreciation on my home like you were talking about.
Well, in Arizona, air conditioners for sure, and it's often a costly item. It can range $2,000 to $4,000. The nice thing about this is if you're refinancing your home or buying a home, you can include the cost of that into your mortgage.
And the lenders are okay with it.
The lenders are okay with it, and then it's great. After you close, you'll get a rebate back. Right now,
From the vendor of the AC vendor.
from the AC vendor, there are manufacturer rebates, and then your utility company as well. APS and SRP, it ranges from $200 to $400. So how great is that? You close on your home, you've always got expenses that you need, whether it's window treatments, and you're getting, in 60 to 90 days, you're getting a check back.
And they're going to tell you exactly the AC to buy too. So because I've heard that, I'm thinking people sometimes get too big an AC that's too large and it's not effective and efficient, which was their whole goal in the first place.
Exactly. You tend to think bigger is better, but with air conditioners, if the unit is too large for the home, it'll cycle on and off, it'll reduce your life cycle, and it increase your energy costs, because the biggest surge in energy expense is when it turns on.
Okay, so let's say we take care of our AC, because I'm thinking, again, Steve's buying a home. It's going to be his last home. But if I buy a home in the 1950s, I might want to change out the air conditioning. So let's say I'm all over that, especially since I'm going to get rebates from the vendor. APS or my utility company is going to give me some money back. I might even get tax credits. We'll talk about that in the next segment. But I want to talk about, I've done all that now. Now what's next? I've got my AC. Now I got that going, because that's our number one issue. What's the next issue?
Well, there are a lot of smaller items as well. People look at their budgets and think, I can't afford new windows. But people tend to think it's going to mean, when they have the energy audit done, it'll be solar, windows, big ticket expenses. But a lot of times, just doing small things like sealing your ducts, sealing your windows, you may not even need to replace the windows, just sealing them. And there are rebates for that. Putting in a programmable thermostat as well.
So even if I didn't want to spend the big ticket item replacing all, I'm going to double pane, I'm going to go all this kind of window treatment. Even if I did small kind of maintenance issues, they could be open for rebates. Now, is that a rebate for the manufacturer, or from APS, or utilities? Or?
From your utility company.
Okay, so let's say I do that. Now, what about efficient things like dryers? I mean, I don't know about you, but I don't like doing laundry, but the dryer. how efficient are they today, and is it will you get any kind of rebate from the vendor or from the utility company for dryers?
For the utility company, definitely. And the manufacturers offer rebates throughout the year, but your utility company, definitely.
What about if I'm going to buy brand new, I'm going to do my kitchen. I live on the refrigerator. I'm just doing my refrigerator and stove. Are those also part of the whole energy package?
Refrigerators are, stoves are not. I'm not quite sure why. But the test is that it has to reduce energy, and that the lender has to be able to see that there's a payback period to it, and for some reason ranges are not included.
So if I have a really good refrigerator, though, that's different, right? I mean, that has real good energy efficiency.
Right. Well, and the other thing, especially for our investor clients, APS and SRP will give you $30. If your refrigerator, if you plug it in and it cools, it can be dented, banged up, as long as it cools, they will come and pick it up free of charge and send you a $30 check.
Just for the old, I don't want to get rid of it myself. I'm totally into that. Well, these are just some of the ideas we're trying to bring across to us so that we can make our home pay for itself and actually give some appreciation later on when we sell it. Well, not when I sell it, but when my kids inherit it and they want to sell it for cash. When we come back, we're going to talk all the things you're going to need to know to get ready to go on home living.
Did you know the average 401k runs out of money just 7 to 8 years into retirement? Time Magazine, the Wall Street Journal, and many other publications have warned of the difficulty of saving with a 401k. But what if there was a way to create tax-free lifetime retirement income with no stock market risk? Good news, there is.
Living in fear of the next market dive is not the way I want to live my life.
Why would I go out there and take on risk when I don't need to?
I have a lot less stress knowing I can't lose any more of my retirement savings in the stock market.
Call now to receive your free, no-obligation analysis of what this retirement vehicle could do for you, a comparison to your current retirement plan, and a free video that explains this exciting opportunity. Start planning a retirement you can enjoy instead of worrying about future tax increases and stock market losses. Creating income that will last your entire life is the most important thing you'll ever do. Take control of your future. Call now for your free analysis, comparison, and video.
Well, welcome back. I'm Steve Savant, your host, and of course I'm with Cheryl King, All That Is Real Estate. And we've been talking about how to make your home actually work for you. And one thing I noticed about Cheryl always likes to compare this kind of pricing, especially utilities and energy efficiency, to MPG. I mean, would you buy a car without looking at the MPG? No, most people are looking at what's the mile per gallon. I mean, especially now, prices over $3 a gallon. And now, talk about what's the standard for a home then? If it's not MPG, what do they call it?
They call it the HERS scale, and you hear people.
Wait a minute, no. HERS?
Yes.
Some gal invented that?
I wish.
Okay.
It's the Home Energy Rating System.
Really? No, talk about that.
Well, it's a scale from 0 to 100, and an optimum home would have a rating of 85. So that's where I love to compare it to your miles per gallon in your car. This is how energy efficient your house is.
So if I buy a home, I've been talking about this all show. If I buy a home, can I ask for the HERS report?
Yes.
Wow, so that's part of the parcel of this. And 85 is a pretty top number.
Yes.
Well, I want to talk about some of this because I'm looking at traditional FHA loans versus energy efficient loans, and we have it up on the board here. Let's walk through it real quickly here. And I don't want to spend too much time on it, but I want to touch it. Walk me through this spreadsheet here for a moment.
Okay. Well, what we've done is taken a typical purchase price, $200,000. Same for traditional FHA or for an energy efficient mortgage, or EEM as we call them. With FHA, it's 3.5% down, so you'd have $7,000 down with either. And also, a lot of people ask, is this also available for conventional financing? Technically it is, but there's not private mortgage insurance, so we limit our conversation to FHA right now.
Okay.
So in either loan, you'd put $7,000 down. Now with the EEM, you're allowed an additional $9,000. And this depends on the person's credit, et cetera.
Sure.
But in our example, $9,000. So like we were talking, a new air conditioner, new appliances for your kitchen, new washer, dryer, can all be rolled into your mortgage.
And you don't need, that's not 3.5% down on that new additional energy efficient cost.
Correct.
So that's kind of like money, so it's actually even less than 3.5 technically.
Yes.
Wow.
Yes.
So I'm sitting on my new loan. I have 193 on the traditional, if I'm reading this right, and I'm looking at 202,000 on the energy efficient one. By the time I do my principal and interest, we're not talking a lot of money here.
No.
And look at the savings with the utility bill savings here is quite outstanding. So you're really dropping it down. It pays for itself. I mean, this kind of investment is going to take care of itself, what, in about a year? You're all in and you're done, and you spent on, I wouldn't say it's the biggest energy efficient spending. You didn't do every window, you didn't do everything, but this is a good game plan to come into. Now, is that the top out for energy improvement? It's only $9,000, or could it be a little bigger?
It can be bigger. It depends on the purchase price of the home.
So this could actually be a way to go to see it pay for itself and give you the cash flow, because I want our homes, I want everything we talk about on this show, no matter what we're talking about. Today we're talking about homes, to actually generate cash flow in our budget, because the number one thing I'm always talking about is putting money away for retirement. Now, I noticed also, not only am I saving money on this, and this is a really good deal, but I noticed that there's so many tax credits available. We've already talked about manufacturing rebates, we talked about utility company refunds, but now we're talking about tax credits. If you owe state taxes, this is a play where you could actually get some of that money, instead of giving it to the state of whatever state you're in, that state, you could be giving this to your house.
Exactly.
Talk a little bit about that.
Yeah, it's, and you know, we were all tired of hearing about the fiscal cliff, but it actually renewed a lot of the energy efficient rebates that had expired in December 2011. So I would say talk to your accountant. You may be able to go back and amend your tax return. I know H&R Block has the look back.
3 years. They're looking back 3 years.
Yeah, so the federal rebate went from $1,500 to $500. So depending on when you made the improvement, maybe you bought a new air conditioner, put in some new windows, you may be able to have your accountant refile and amend your return.
There's a whole list of incentives that are out on the web per state. You'll have to check your state. And when you see the tax credits that are involved in this, if you're doing any kind of major rehab on your home, or you're buying a new home and you're thinking about making it energy efficient, you need to hop out to these sites. And again, you say, well, Steve, I don't know how to do this and so forth. Well, of course, we'll always forward all the information to Cheryl. She'll be able to help you out in all these things. But when I'm looking at this, we talked about AC and furnaces. We talked about efficient refrigerators. We talked about window treatment technology. Heck, I was talking about, we didn't get into this, but how about water conservation? How big is that in this idea?
It's a very big part of it.
Especially in places like Arizona. I mean, if you go ahead and replace your irrigation and go to more desert-friendly foliage and flowers, that's going to help your not only your bill, but do you get any credits for that?
You do, and some of the local municipalities offer credits as well.
But beyond, on top of the tax credit?
Yes.
Well, I think these are all things that we need to look into, because to me, making your home work for you and freeing up money and giving a regular monthly budget, I want to be able to take that cash flow, that savings, everything we talk about on the show is always about how can I free up more money so that I can put more money aside. These are excellent ways to make your home value. I love the idea, for every $1,000 that I spend in energy efficient, I might be getting back on appreciation at the sale of my home anywhere between 10 and 12 times that number. Cheryl, thanks for being on our show. Don't forget, you can watch all our shows so that you can figure out how to put more money away for retirement. Remember, we have the educational tools you need to help your learning experience, and we've partnered with financial professionals who know how to use tax credits, rebates, and refunds. For more information on how you can make your home efficient and save more money for retirement, just go out to the show's website at www.oneforthemoney.tv. And remember, you can follow me on Twitter and visit me on all my social media network sites: Facebook, LinkedIn, Google+, YouTube.